Hey kids, got a text from a great client over the weekend, and they were asking about the proposal that the administration's put forth about mortgage portability. And so I asked Google Gemini to give me kind of the most basic answer. That's why it's a very generic question. Tell me about portable mortgage proposal, because I wanted the big general answer. I didn't want to bias the answer by giving too many specifics in my question. So take a look at this. This is from Google Gemini. The portable mortgage proposal is a concept being actively evaluated by policymakers in the United States, such as the Federal Housing Finance Agency Director Bill Pulte. The idea is to allow homeowners to transfer their existing mortgage and, critically, their current often low interest rate and terms from their current home to a new property when they move. How it works in theory: the transfer. A homeowner sells their old house and buys a new one, but instead of paying off their old mortgage and getting a new one at prevailing market rates, they would port or transfer their existing loan rate and remaining balance to the new property. This is the reverse of an assumable mortgage, where the buyer takes over the seller's loan. Buying a more expensive home: the original mortgage is ported or transferred, and the homeowner would need to cover the difference in price with cash or a second new mortgage at the current market rate. Or buying a cheaper home: the homeowner would use the sale proceeds to pay down the mortgage balance, and the remaining smaller loan is ported to the new, less expensive property, keeping the original low rate. So the goal of this is really it says it right on the screen, is to get people out of feeling locked into their mortgage. I have clients with 2.5, 2.69 interest rates, and they're struggling with that decision to move because those interest rates are so low. Those can create generational wealth for their family. So, they're reluctant, unless they really need to kind of move and even touch that first mortgage. So this is a really neat idea, but I think we need to get into the real details of how this would work, how expensive it would be, and whether the cost benefit analysis works out for everybody. Because the banks that hold those low interest rate mortgages, they're going to want to make money when they port it over to a new property. So I think there are going to be fees or origination. There's some fee going to be involved there. And so, and then any new mortgage that you get on top of it, are they going to want to be in second position? Are they going to want to be in primary position? There are lots of little details that we need to hammer out, but this is a pretty neat idea. If you could take your existing balance and transfer that over to a new property, and then get a small loan for the difference, or pay down the balance in cash, and then you have a much more reasonable, smaller loan. There are a bunch of really good ideas here. But again, the devil is in the details. So we really need to flesh out this proposal even more and see what the real numbers look like before we can go, all right, let's run with this. Because again, the banks are going to want to make money when they transfer the existing loan to a new property. So there is going to have to be some sort of fee involved there. And then again, they're going to want to give you a second or maybe a first mortgage instead of a second. Maybe they want to put this lower interest rate one in subordinate position. We don't know yet. We don't know the details. So again, the devil's in the details, and I think this is a really neat idea. But until we have like actual hard numbers, it's hard to really evaluate whether this is a good idea or a bad idea. So give me a call, shoot me a DM. Let's get you in touch with one of my lenders so we can kind of run down both paths, see if a portable mortgage option is the best for you, or if we can get you a better rate on the open market without having to do that. Maybe it's beneficial for you to go the other way. So let's have that conversation. Let's sit down, talk with the lender, and get you on the road to home ownership. Talk to you soon.